Hey everybody, Chuck Barone here on Monday, June the 24th, 2024. All right, you made it, Gazi. Nice to see all my friends on the chat doing their thing. Good to see all the regulars on there. It's kind of cool, kind of cool. And welcome everybody to the show. It was a long weekend for me. I had Friday off, had to do a little traveling. Long road trip from Las Vegas to Winnemucca, Nevada, which is about a 7-hour drive from here. A quick ceremony on Saturday, drive right back. We got to eat at this Basque restaurant up in Winnemucca, this place called the Martin Hotel. You guys have ever had Basque food? Man, it is so good. And this place really poured it on. It's kind of served family style, like some Italian restaurants do, where they just keep bringing you bowls and bowls and bowls of food. Unbelievable. A great time in Winnemucca, but I'm glad to be back. Glad to be back. All right, anyway, let's talk about the crazy today, guys. You see this market? I don't know, man. Maybe it's me. Maybe it's me. When you get old, you kind of forget some stuff, but I'm seeing a market like I've never seen a market before. It just seems like everything's in this giant bubble now, right? You got stocks in a bubble, you got housing in a bubble, you got everything starting to come down now. You got some deflation, some little balloon popping with Bitcoin, precious metals struggling, bond market in a major crapper. We don't even want to talk about housing, please. Hey, Jordan, my man, good to see you on. Anyway, it's already starting to pop already. You saw Nvidia. This is for Alfred here. These markets, you had Nvidia basically leading the NASDAQ up, breaking records every day, 10 for one split. Well, guess what? It's down 13% in the last 3 trading sessions. So it's already breaks a record and then zoop right back down to earth, brings the NASDAQ down pretty strongly today. All right, so let's talk about these markets. We have this weird divergence all of a sudden between the Dow and the NASDAQ and the S&P. Seems like when the S&P and the NASDAQ are up, the Dow's down and vice versa. Very strange thing. Happened again today. So we had the Dow up 260 points, 39,411 on the Dow. That is a 4-month high for the Dow Jones Industrials. At the same time, Nvidia crashing down, NASDAQ down 192 points, 17,496. The S&P down 16 points, 51 or 54.47. So you have all these averages, Dow, NASDAQ, S&P, all not at record highs, recently at record highs and very close to record highs now. Here's the thing, guys. Any single little bit of economic data that points to the Fed not cutting rates this year, and we're going to get that sooner or later, okay? Boom. That's the end of this stock market rally. The end. And it's going to happen. Believe it, guys. This perfect landing and everything's going to go perfectly, and we're going to get rid of the highest inflation in 40 years, and we're going to do it with, rates, an overnight rate at 5.35, and we're going to do that in a year or a year and a half. It just defies reality. Okay, now the things are going the Fed's way right now. I'll give them credit for that. And the economy is slowing down just exactly like the Fed wants it to. Like I've told you guys a million times, rate cuts are not going to bring down inflation. Rate cuts are going to slow down the economy. And that lack of demand then will bring down prices because there's no demand for product. So that's what we're going to see. And that's the way it's going to play out. I've been saying it since the beginning. I'm still saying it now today, right? All right. So that's stock market. Bond market today, what a weird day. Both the 10-year and the 2-year sitting unchanged. So you have the 10-year, 4.25, was up like 9/1000ths of a point. And the 2-year, 4.72% unchanged. I got to say, the bond market has really been the craziest. It's been in a bear market ever since the Fed started raising rates, and a pretty deep bear market, guys. All those old bonds, everything that was sold before the Fed started raising rates, now wham, right down. And so you got two tiers of bonds now. You got the older stuff with subpar rates and depressed prices. You got the latest stuff they've been coming out with tons and tons and tons and tons of it. We've got a couple big treasury auctions this week that are going to be very, very important to see how they're subscribed. The demand hasn't been there, and these bond dealers who work with the government to distribute these treasury bonds have been eating more and more and more product, can't get rid of it. Hey, touchdown Tommy on, go elevate. So we'll see, guys. It's going to be fascinating to see how this bond market is going to break out of this bear run. Because even if we get a quarter point rate cut by the end of the year, and I'm figuring we might still get one in December, what is that really going to do, guys? So you lower the overnight rate from 5.35 to 5.1. Okay. Well, I just don't see that cut being such a gigantic catalyst that it can save us. Now, we'll see, how it starts to work out. If the Fed cuts rates in December, for example, and they're talking about possibly cutting rates and getting into a cycle of rate cuts like they were with rate increases, okay, maybe that works. If they're going to cut rates a quarter point and come out with their Fed gobbledygook about, market data, blah, 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 maybe psychologically you get a little bit of excitement. Okay, maybe the trend for raising rates and high rates is over. But until high rates are over, it's nothing more than speculation, guys. So remember that, okay? Okay, the dollar today comes down a little ways, down 33 basis points on the index, 105.50. So the dollar still has a good, strong number. Looked like it was heading back up toward 106, now moderating a little bit. We will see. We will see where the dollar goes. Personally, I'm a strong dollar guy. I like to see the dollar have strength. I'm not an exporter, right? So I don't have that motive like so many people do. What a perverse thing, though. You have to make money overseas. You have to basically tank your own currency to be competitive. All these different central banks doing the same idea, race to the bottom. It's just nonsense, crazy shit. So hopefully the dollar will hold up. Metals today, with the dollar coming down a little bit, metals had a decent day. Gold rallies up $14.30, $2,335.30 for an ounce of gold. Silver up just 6 cents today, 6 cents per ounce, $29.51 for an ounce of silver. Hopefully we're going to see silver get back up above $30 per ounce and hold that position. We need to see that to see the silver rally continue. Oil rallies up again today, up 90 cents. $81.63 for a barrel of West Texas Intermediate, making me look like a donkey because I've been telling you guys oil prices are going to come down. Trust me, guys. This increase today, I was looking for a reason for it. Well, they're speculating that demand will be high this summer. Really? You guys like watching the economy and seeing what consumers are doing? Because what they're doing is they're cutting out all the extra stuff. They're buying the necessaries. They're buying the stuff they got to buy. They're cutting out all this extra frilly stuff. So what's going to cause the spike? I know you think people are going to still take big road trips this summer. Maybe some will, but I'm guessing a certain percentage won't. So I don't know. I'm a little bit skeptical about the motive and the reasons for this rally. Bitcoin today, last time I looked, it looks like according to Elevate, it's back up above 60 or back to 60. Bitcoin really taking a shot today. Last time I looked, down $3,841, 59,720. So that blew right through support. Hopefully we'll see if it gets a little bit of a bounce from there. If not, if it's going to continue down, it looks like it could go all the way down to 50,000, which would be, more than a 30% correction. And we'll see where Bitcoin goes over the next couple of days. And like I do every week, guys, here's what we can expect this week. Today, no data coming, just earnings. Tomorrow, we will get consumer confidence. This is an important one. Consumer confidence expected to be down. On Wednesday, we will get short selling information. We will get the mortgage bankers index expected to be down. We will get new home sales, which are expected to be up, but new home sales now making up one third of house sales in real estate. Typically, new homes are about 10 to 15% of the market. Now, because there's nothing for sale in the existing home market, new home sales more than one third of the market. And a lot of it realtors too, because they can get their clients breaks on interest rates and they can get some free upgrades and some stuff like that. New builds that they can't get on existing housing, but new builds leading the parade in real estate today, guys. On Thursday, we will get durable good orders. We'll get GDP for the first quarter expected to be up 1.3%. We'll get Freddie Mac numbers, and we will get first-time jobless claims, which are also, again, expected to be higher than they were last week. Friday, PCE. Ooh, that's going to be the big one, man. That's what everybody's waiting for this week. I'm going to guess PCE is going to be a number the Fed's going to like. It typically seems to be significantly lower and more calm than CPI. I guess that's why the Fed likes it. We'll also get personal spending data. It's expected to be up. Personal income data also expected to be up. We'll get the Chicago Purchase Managers Index expected to be higher. And the University of Michigan, which is one of my favorites, that's also expected to be up overall. But it's all the internal numbers and stuff that really make up that University of Michigan. So I'll be dissecting that. We'll talk about that toward the end of the week. All right, news you guys need today. A couple quick things. Home prices, real estate prices, new existing homes setting a new price record again. Guys, listen to this. Median price USA, $419,300, a new world record, an absolutely freaking bananas, nutso crazy number, telling us now, really confirming real estate is in a bubble, and it's a supply and demand thing, right? There's no supply, and even though demand is stricken because of super high mortgage rates, there's enough demand that there's kind of a squeeze with not enough inventory, driving prices higher. And here's what's going to happen, guys. And I'm sure Jordan will agree with me. Now, Jordan is a guy, he and I share an office. He's a real estate agent and one of the best in Las Vegas. I'm sure Jordan will agree with me. When they start to lower rates, there's going to be a big stampede of people into this real estate market. All these first-time buyers who've been waiting for rates to come down, they're going to come in, start making offers, and what's going to happen? Rates will come down, and you'll see a spike again in prices. And not only that, with the minuscule amount of inventory that's available in this existing housing, what you're going to see is the bidding wars again, like we had back in 2021. People paying overappraised value for real estate, which I would never recommend anybody ever does. It's going to be crazy. So new home price record. So if you own your own home, guys, if you're one of the fortunate, which I know Jordan does, and I know Tommy Elevate does, and a few other guys I know do. I own my own home as well. We're all the beneficiaries of this wonderful increase in equity. Hopefully we'll get to keep most of it when things correct, because they always inevitably do. As I mentioned earlier, Nvidia already in a big correction, guys. That did not take long, did it? Boom, 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 break records, 10-for-1 split. Had everybody interested in that. Now in 3 sessions, down 13%, and lopping off more than $400 billion in stock value. Oh, that's painful, man. And that's over the course of the last 3 trading sessions. Crazy stuff. Bank stocks rallying. You see this today, guys? The Fed has been talking about new reserve requirements. Banks were shitting their pants because any bank that really had a trading arm, they were talking reserve requirements of 16%, which would really, really, really make, handcuff banks. It really would. It would really crimp their ability to make loans. There'd be less loans being made. Now the Fed readjusting this idea talking about going from 16% increases down to about a 5% reserve increase. So nothing dramatic, and that's why you saw bank stocks rally up today. Experts predicting this mortgage lock-in where people won't sell their homes because their mortgage rates are 3%, 2.75%, whatever, super low mortgage rates, people refusing to sell their houses. Experts predicting this mortgage lock-in will stay in effect, will last 6 to 8 more years. Oh, shit, guys. So what they're basically saying is people will not be looking to sell their homes until the prices are so astoundingly high, they got to take the money. They're not going to give up those mortgages, guys. It's really, really put the real estate market into a huge pickle right now. Big shot investor, this guy Arnott, he's the fly in the ointment, at least is what I've been reading, because he's saying the next move the Fed makes will be a rate hike. He says that because there's still so much money sloshing around this economy, because the Fed really doing nothing to hold back, the rates are not high enough to bring inflation down to target. He's talking about he sees inflation 3.5% to 5% at the year end. Well, that would not be good news, would it, guys? Now, if that actually does happen and the Fed has to raise rates, look out below on these stock market numbers, guys. That would really shock the market pretty badly. And finally, to wrap it up, we got the big debate coming Thursday night. Going to be a fascinating thing to watch these old guys up there. I wish they should just give them, super padded boxing gloves and let them go. The whole thing would be over in 15 seconds because neither one of them are what I would consider very athletic for their age, I'm guessing. But what the big news is, Trump is Mr. Pro-crypto, claiming he will be the crypto president. Biden, not so much, kind of more of an old school anti-crypto kind of guy. Now, the big excitement in these markets is we're going to see Trump and Biden on the debate stage Thursday talking about cryptos, talking about crypto policy. Should be fascinating and will probably drive that market one way or the other, right? All right, anyway, that's it for the day, guys. It's Monday. We'll wrap it up a little bit early today. Only 17 minutes and change, which is short for your gas bag host here. But we will be back tomorrow to bring you guys all the news you need. It's going to be a fascinating week. We got a lot of important stuff coming on. We're going to see the markets whipsawing all over the place. So get your crash helmets on. Let's get ready to rock and roll. It's going to be a fascinating week. Can't wait to see how it all turns out. Everybody take care tonight. Have a good evening. Big Game 7 tonight for the Stanley Cup for you hockey guys. Please hit the like button, guys. Hit that thumbs up. It changes the algorithms around, helps us get more views to the video. We really would appreciate that. Back tomorrow to bring you the news you need. Until then, guys, take care. Thanks.